So what I've been waiting for has happened out. My fill is good, 820 at 19.99 and 75. That's 19.99 and 75. Initial target hit here at 19.99. Near month contract, September. So for those of you that may have gotten out at the recommended incremental target at 19.99, there's a quick profit right off of the open at 820. Now the MACD's disparity is widening, people, and it looks like we might be able to get through the 19.99 level with the next target to the downside at 19.98. However, on a 15-minute chart, know that we do have substantial support at 19.98.50. So 19.98.50 will be the next target that's hit. There's no doubt whatsoever, if prices will continue to move to the downside. And that is right here. The additional volume that's come in should continue to push the prices to the downside. The 15-minute indicator setup is good. As you can see, the MACD has fired in the upper region of its subgraph. Your level here at 19.98.50 is clearly pathed out by the dominant data points laid out in the past. EMAs are good. MFI through the trend line and momentum to the downside. Checking money flew to the secondary trend line here. SMI is good to go. And we're back to the 1-minute chart. Accumulated volume is good, people. 1135, 1552, and 1303. 8:21 a.m., 9/9/2014. Mark to the market prices trading 19.99 flat, looking to get through support for the continued move to the downside. Okay, so for those of you that got in here, prices are holding. You have a chance to get out at 19.99, people. Okay, 19.99 after getting in at a very possible fill, the same one that I got at 19.99.75 for a quick 3/4 of a point. There's nothing wrong with that. You can bank off of the accumulated points, people, and at the end of the day, as they say in the city, in London, you add all the different trades up for the accumulated total for the day, and that's where you win. So there's a quick 3/4 of a point. You can take that off of the board. I want to get the check and money flow and the MFI into another screen so I can manage these a little better as prices may hold that level or get through it. I'm looking for the continued momentum to the downside of the check and money flow right now, and it is in play. 19.99 MTM. Looking for the follow through to get down to 19.98.50 on the 15-minute level for an out. Check and money flow, continued momentum to the downside and oscillating up. -107, increasing to the downside. Now for those of you who got out at 19.99, okay, if you're going to get back in this trade, you're going to get back in at 19.98 and 75. Okay. Long-term holders, you're still good. The check and money flow has retraced back up. Okay. I'm out of this trade based on the 19.99 level. I don't mind identifying exactly where I get in. And when I can, I'll talk about exactly where I got out. But I can't be the judge of anyone's personal trading profile. For those of you who are long-term holders, you know you're still good to be short, even though you're taking some heat to the upside off of the 19.99 floor. That's at your discretion. I'm sure that a lot of traders are still in this trade. I'm talking about booking the accumulated points. I know that if I get back in, I need to get back in at 19.98 and 75. So everybody copy that, 19.98.75. How many people got a piece of this profitable trade? Can I get a raise of hands, please? Adrian, Lloyd, Tim, James. What about you, Annelle? Did you get this? Okay. Tim, I knew you'd get that. And good for you. I knew you'd get that too. Good, good, good. The people who have been trained by myself or Adrian Bickham within the parameters of this methodology, who've been in this room for at least a month, they all traded this profitable move. So let's let this serve as a perfect example of working off the accumulated points. You're in and you're out. You're in and you're out. Volume dries up, volume comes in to push the prices up, and you're out before you have a chance to give it all back, and maybe then some. This is Jeff Killian, the Chief Market Strategist for the Inside Technician and this live trading room. It is September 9th, 2014. We have recorded this for all of you to see. We'll post it on the blog. It is now 8:29 a.m. Once again, 9/9/2014. Signing off, waiting for the next high probability trade to come to us. We'll see you on the next one. Additional volume comes in. Target hit at 1996.50. So for those of you that waited for the additional preferred entry to be hit at 1998.25, you already have an excellent profit in play. Short in here or here. Your 1996.50 level has been hit, and that coincides with the 1996.75 level that's laid out by the majority of data points here. That's 96.75. The next level to the downside that we haven't discussed yet is 1995.25 and 1995 being a daily support level. What an excellent showing of the power of tracking the largest institutions. Now, for those of you that are in this trade, I would recommend getting out because 1997 is up from the 1996.50 and 75 level that's located on the 15-minute chart. The 1-minute chart probe has already hit 75 level on a 15-minute chart and the 1-minute chart level at 96.50. So once again, working off the accumulated points, people, this would be an excellent area to get out. For those of you that got in even as late as the secondary in at 1998.25, you're at 1997 right now for a 1.25 gain. That's another 1.25 on the secondary in. If you got in earlier, you're up a 0.75. No problem. Plenty of money made this morning, right? Plenty of money made this morning. 1997.25 MTM recommended out was already made at the 96.75 15-minute level, which has been hit 2.5 minutes ago. No guarantees the prices will continue to trade down. Chicken money flow is up versus MFI, which is still down. Major support being hit at 96.75 on a 15-minute chart. Price is moving sideways on a 1-minute chart. It's more than time to have been out of this trade, people. Does everybody copy what we just did? Okay, so let's wrap up this take at 9:07 a.m. on 9/9/2014, demonstrating how prices trade through specific levels at preferred ends, in this case 1998.75, and then the secondary for the margin of price fluctuation getting through and closing below the 15-minute level established here that was so critical in order to be out. Okay, 1998 and 50. And they're following through all the way down to a target at the 1996.75 and 1996.50 on a 1-minute chart. Price is moving sideways now. Off tape, 9/08/2014. Back in here at the 1995 and 75 level under the pretenses that prices will continue to trade to the downside. Now, if they don't, I'm right back out, like I said, and we just move on. Time is 9:32, right after market opening, September 9th, 2014. Prices hit a target 94.25. That's a possible out after the preferred in. Book a profit real quick. Right? There you go. There you go. Take it. It's there. It's still there. You can take it. I'm out, even though prices may continue to trade to the downside. I'm out and book the accumulated points. And as prices continue to trade up, that was clearly the correct decision from my perspective. Long-term holders, you're clear. 15-minute indicators are strong. With the market opening just shortly ago. That's a risk that I didn't want to take. For those of you that are new to trading, that is a more advanced form of trading that I would not recommend you do until you have a lot of experience behind you. Market opening is some of the most difficult trading that exists, especially where we're into a tight market right now. 9:33 a.m., September 9th, 2014, demonstrating one more profitable trade that was identified by and taken by myself here at the Inside Technician. A quick in and out. Hold time. It's about a minute. Now, there is possibilities that prices will continue to move to the downside. The test is already through the daily level, as you can see right here. Now, we have established targets at 93.50, 92.50, and 91.25. Take note of those levels, 93.50, 92.50, and 91.25. Clear across the board on all 15-minute indicators. Long-term holders, clear to stay short. 1995, 1994.75 MTM. Looking for the additional follow-through. One tick below. Now, clear to be short. Again, people, clear to be short. I am back in this trade under the pretense, the prices will continue to move to the downside. And once again, I'll be right back out. Here we are. 1993 and 50, 1992.50. Thank you. Okay, target hit at 92.50. You can take that off the board right now. 92.50. 92.50 is hit and held. You can take it. 92.50, 92.75, traders. After getting into 1994, I'm out. And price is trading up from 92.50. As I suspected, back close to the preferred end. Long-term holders, you're still clear across the board. But I'm not in a position to give any money back. I'm banking off the accumulated points because the market's tight. 9:38 a.m. MTM 1993 and 75. Now up off the floor at 92.50. I get filled at 92.75 after the 94 in at 9:36, 9:39 on the out. All bets are off for any future trades to the downside as prices retrace on a 1-minute bar back up through the preferred entry. 94, now at 94 and 50. One more real-time representation of a highly profitable quick in and out, booking off the accumulated points. That trade was good for me. Let's see. Let's check the sheet here. Point and a quarter. Point and a quarter times $50 every full point move. 62.50 per contract gain. Times 20 contracts traded, pulled in another $1,250. It's a long tape this morning. So I'm going to cut this tape, this vid, on this trade at 9:40 a.m., September 9th, 2014, and showing another example of a trade identified by us here, the Inside Technician, within this live trading room. For more information on this highly profitable room that has 3 winners today so far, contact us through the website at theinsidetechnician.com. Go to the blog, fill out the information under the live trading room category, and you'll be in when the next full access pass begins on the Monday after you have signed up. We'll see you on the next highly profitable trade. Our methodology is identified with, and we are now clear to be short, just short of, a follow-through on a close. All we need is prices to close at 1992.25 with this volume. Well, now they're already moving down. I have to take the trade. I'm in. Can't wait. Under the pretense that they will follow through, I'm in this trade right now. Yeah, get filled at 1992. Oh, well. And if they don't, we'll be out of this as fast as we got in, right? As always. Price is trading down now, looking to get to the initial incremental target at 91.25. 91.25. Time is 9:59 a.m. September 9, 2014. That's 9:59 Eastern. Looking for the follow through, getting through 91.25 to the next level to the downside, 1990, based on 15-minute chart. That's 1990 to the downside, 91.75, 91.50. Uptick on shaken money flow, 91.25 support level on a 15-minute chart. Now traded through. No follow through. No continued hold. The probe is there. 10 a.m. prices should follow through based on the market settling down for half an hour and allow us to get to the 1990 level. If not, it means there's something that's going on and neither you or I know, only they know, and that they will act on first. Okay, all traders, be prepared to get out in 1990 on a rally, book to profit. It's a major level drawn from the 15-minute charts. I have an uptick on a shaken money flow. I'm out of this trade. Okay, because of the uptick on the shaken money flow and landing at the 91.25 and not continuing to follow through, I decided to get out of this trade. Good fill at 91.25. At best it could be done. Booking off the accumulated points once again here. In, out. 91.25. Again, right here, 10.04. Gives me another 0.75. 4 legs to the downside today. Called and taken. All profitable trades. No losing trades today. No losing trades today. 4 winners for a total of 3.75 points now. Accumulated points, traders. 3.75 points times $50 for a full point move is a 187.50 gain per contract times 20 contracts traded. Brings me in now a change up $7.50 for a total gain for the day at $3,750. This tape has an extended runtime, but we could let this serve as real-life trader education and how to do this in real time. For those of you who are new to us, we have the course material. We have the S&P 500 Elite Trader Training course for you to help you cut through the chase. There's a direct relationship between the end-of-day charts, knowing where you stand every single day within the U.S. markets, whether you're net neutral, long, short, what category, what strength that level is at, and then crossing the bridge from end of day into real time. You can contact Adrian Bigham, the acting agent for the Inside Technician, to purchase that course today. And of course, there is the Executive Mentorship Program, highly selective to get into that. And that is the highest level of education that we provide, teach you how to do exactly what I did this morning. This is Jeff Killian, the Chief Market Strategist for the Inside Technician. It's 10:04 a.m. Eastern Standard on September 9th, 2014. Cutting the tape, and we'll see you on the next highly profitable trading room session beginning tomorrow at 7:30 a.m.